For more on the markets ahead of the Fed's Economic Policy Symposium in Jackson Hole, let's bring in none other than Ed Yardeni, president of Yardeni Research. Ed, to try to help us wade through the noise and everything and figure out what kind of speech should we be bracing for? And what do you make of the fact that actually the markets are still more dovish than the Fed itself is right now in terms of that September cut? They think still a chance of 50, whereas as we've been following, I'm not quite hearing that maybe from officials.
Yeah, the markets are very dovish. Expectations are 25 to 50 basis points of the September meeting. I think there's still expectations that maybe we'll even have 100 basis points between now and year end. I think it's going to be 25 basis points at the September meeting, and I think it's going to be one and done. Economy's just doing too well. I know that people got freaked out by the last employment report, but I think a lot of that was weather. And some of the other indicators that came out kind of confirmed that, like housing starts, single-family housing starts took a dive in the South. So if I'm correct about that, they're going to get some indicators before the September FOMC meeting that suggests the economy's alive and well and the labor market's doing well and that inflation's continuing to moderate. So I think 25 basis points is enough. And I think that's what Powell will probably communicate. It'll be dovish, but not as dovish as the market is discounting.
I don't know if you have a kind of an overall thesis for what's been going on this cycle. Amrita Sen, who we just talked to a moment ago, in the past has said it's been an industrial recession, but not a consumer one, which Walmart really confirmed. So a lot of the typical signs that start in the industrial economy and tell us a slowdown are coming haven't worked because it's just been a slowdown in the industrial economy post-pandemic, which kind of makes sense. So what does that mean for stocks? I mean, the short answer is they keep going up, but is it more nuanced than that?
Well, I think it is more nuanced. I think the goods economy has been in a growth recession, but it's really interesting. We had this huge spike up in demand for goods by consumers coming out of the lockdowns. It lasted about a year. And then rather than taking a dive, the demand for goods just kind of went flat. And I think we're just kind of finally catching up with the upward trend we had before the pandemic. So that's not so terrible. But it doesn't look very good when you look at some of the indicators for the goods economy. It looks like a goods growth recession, not a outright recession. And meanwhile, the service economy has been fine. There's technology now accounts for half of capital spending, and that's been doing quite well. So all in all, the economy, I think, is all right.
Do you just kind of stick with stocks broadly? Do you try to tilt more towards big growth stocks and the kind of AI names that became a bit overextended? We were just talking a moment ago. I mean, you do wonder about an NVIDIA. At some point, the edge that they have gets competed away. AMD as well doing a deal this morning. I don't know if that tells us that, where exactly should people kind of go if they want those big gains,
Well, if you're nervous about the Magnificent Seven, there's always the somewhat less magnificent, but potentially magnificent S&P 493. There's a lot of stocks in the S&P 500 that have done actually pretty well, just not as well as the Magnificent Seven. And I think there's still plenty of opportunity for the market to go higher as it broadens out. I'm not quite as excited about the small caps, mid caps, because I think the excitement there was justified if interest rates come down a lot, but I'm not in that camp.
So because let's just pause on that for a second. Do you think that people who are buying the smalls, the mids, need the Fed to cut more significantly? I mean, even if they did, let's call it three cuts, is that going to be enough for those stocks to work?
It's enough. Well, I think they've already discounted that, quite honestly. So it's only enough if the expectations is there's more to come. And I don't see that. So at some point here, after the market broadens out to the mid caps, I think the large caps outperform again, but not necessarily the Magnificent Seven, more like everything else in the S&P 500.
All right, we'll leave it there. But by the way, if Powell is more quote unquote hawkish by kind of talking the way you're talking this week and the market sells off, you then see that as a buying opportunity?
Yeah, absolutely. And I think it'll be less dovish rather than hawkish.
Ed, thanks. Ed Yardeni. Appreciate it.
Thank you.